Welcome! So today, we're going to tackle a topic that, let's be honest, can feel like a total black box from the outside: how to actually trade Bitcoin. We're going to break it all down, step by step, and demystify the whole process.
And yeah, that's the million-dollar question, isn't it? If you've ever looked at one of those crypto charts with all the flashing numbers and just felt completely lost, trust me, you are not alone. This whole explainer is designed to be your starting point, to turn that confusion into a clear path forward.
Okay, let's dive right in. First things first, what are we even talking about when we say trading? Because, and this is key, trading Bitcoin is a totally different animal than just buying some and hoping it's worth more in 10 years.
Right. So the main thing to get your head around is that trading is all about the short term. Traders are actively trying to make money from those price swings, whether that happens over a few minutes, a few hours, or maybe a couple of weeks. It is an active strategy, not that passive, set it and forget it kind of thing.
This slide really lays out the two different mindsets perfectly. Look over on the right, holding. That's like buying a house, because you believe the whole neighborhood is going to be amazing in the long run. Now look left, at trading. That's way more like flipping the house. You're trying to profit from the market's current momentum, and that just naturally means more work, more attention, and yeah, higher risk.
Okay, so you get the concept. Now for the practical stuff. How do you actually get in the game? Let's walk through setting up your home base, a secure trading account. This 5-step process right here is your blueprint. And notice how security is a huge part of this. Step 2, enabling two-factor authentication, or 2FA, is not optional. It is absolutely non-negotiable. And that last step, so important. Don't go throwing a bunch of money in right away. Just make one teeny tiny trade to get a feel for how the platform works. Think of it like a practice lap before the real race. And when you're picking that platform, these are the things you've got to look for. I mean, sure, low fees are great because they can eat into your profits, but don't sleep on things like regulation and customer support. Knowing there's a real company behind the scenes and that you can actually get help if something goes wrong, that peace of mind is absolutely critical. All right, account set up? Check. Funds are in? Check. Now for the main event, actually placing a trade. This is where all the planning you do beforehand really starts to matter.
Think of this as your pre-flight checklist. Before you even dream of clicking buy or sell, you need a plan. So let's look at step 2 real quick. A market order just buys at whatever the price is right this second. A limit order, on the other hand, lets you say, hey, I'm only willing to buy if the price hits this specific number. And then steps 3 and 4, those are your safety nets. A stop loss gets you out automatically if the trade goes bad, and a take profit cashes you out when you hit your goal. This is how you manage your risk and, importantly, take emotion out of the driver's seat.
And this quote just nails it, doesn't it? Anyone can click a button. The people who are successful at this are the ones who have the discipline and the strategy before they ever enter a trade. It's all about doing your homework, not making an impulsive click. Okay, we've gone over the how, but honestly, this next part is probably the single most important section in this entire guide. Understanding and respecting the risks, that's not just a suggestion. It is essential for survival.
That crazy volatility is what draws a lot of traders to Bitcoin in the first place, right? The chance to make big gains fast. But it's a massive double-edged sword. That same energy can cause incredibly fast and huge losses if you're on the wrong side of a price swing. The market doesn't care about your plans. It's going to do what it's going to do.
Now, if volatility is the fire, then leverage is like pouring gasoline on it. It lets you control a really big position with just a small amount of your own money. Which sounds awesome, right? But it magnifies your losses just as much as your gains. A small mistake when you're driving at 10 miles per hour is just a little fender bender. But that exact same mistake at 100 miles per hour, it's a catastrophe. That's leverage. Let's just look at this slide for a second, because it makes the dangers so clear. On that top line, with no leverage, a 10% price drop means you lose $10 from your $100. It stings, but you're still in the game. Now look at that bottom line, 10x leverage. That same 10% price drop doesn't just lose you $10, it completely wipes out your entire $100 stake. Your position gets liquidated, it's gone. And beyond all the technical stuff are the risks that live inside your own head. When you see a price just shooting for the moon, that fear of missing out, FOMO, can be overwhelming, and it'll tempt you to buy at the very top. And when it's crashing, that sheer panic can make you sell at the absolute bottom. Your best defense against these emotional traps is to stick to the plan you made when you were calm and rational. And finally, there are risks that are just outside of your control. The platform you're using could get hacked, or the rules in your country could change overnight. This is exactly why choosing a reputable, regulated exchange is so important.
And don't forget, in most countries, your trading profits are taxable. You have to keep track of that stuff.
So that brings us to our last section, the logistics. After the trade is over, what do you do with your coins? How do you keep your money safe? And how do you eventually get it back into your bank account?
This is a classic question for anyone in crypto, and it always comes down to this trade-off between convenience on one side and security on the other. So what are the options? This table breaks it down really nicely. Keeping your funds on the exchange? Super convenient for fast trading, but it's the least secure because you're trusting someone else with your money. A software wallet is an app on your phone or computer. It's like your physical wallet. You have more control. And then you have the hardware wallet, which is a little device that keeps your crypto completely offline. It is the Fort Knox of crypto storage, maximum security, but a little less convenient for day-to-day trading.
And this leads us to a really sensible, balanced strategy that a lot of traders use. They just don't put all their eggs in one basket. They keep only what they need for their active trading on the exchange, and they move everything else, their profits or their long-term holds, to a secure wallet that they and only they control.
This is it, the final piece of the puzzle. It's one thing to see profits on a screen, but how do you actually turn that back into the money you use to buy, milk and bread? In the crypto world, we call this process using an off-ramp.
Well, the most common way is just to sell on the same exchange you use for trading and withdraw it straight to your bank account. Peer-to-peer markets are another option. They're kind of like an eBay for crypto, where you connect directly with the buyer. And while you can use a Bitcoin ATM for quick cash, just be warned, the fees are almost always way, way higher.
And so, this is where we'll leave it. We've walked through the mechanics, the strategies, and maybe most importantly, the risks. You now have the blueprint. But the biggest question isn't about the market at all. It's about you. Does the constant management, the high risk, and the psychological strength that trading demands, does that actually fit with who you are and what you want? That's the real homework.